people will be joining us on the webinar itself, but we'll go ahead and get started so we can stay on time today. So first of all, I just want to repeat that we do have the chat function open, so you can say hello to the group, and then you can also submit questions via the Q&A today, and Stacey can get those answered. And so please utilize those functions. And then I would also like to give a shout out to CJM Financial. Let me share my screen here. Give it a second. All right. So just want to say thank you to CGM Financial for being our presenting sponsor for today's webinar. They've been partnering with us for the last month on our webinar series as part of the Illumination series. And we've got a couple more webinars coming up this month that we'll talk about at the very end today. But CGM has been a great partner with us on that. And it looks like, I believe Trent is joining us today as well. Let me see if I can make him live here. Sorry, I lost my screen. There we go. It disappeared on me. Trent, I just gave you permission to talk if you'd like to say a couple words.
Just good morning and hi from CJM Financial. This one's a little bit different. The screen's a lot different than I'm used to. So just wanted to say thank you for joining us. Thank you, Stacey, for all the information and wealth of knowledge she's going to share with us. Keep in mind, as Rob Denson calls this is not a bad time, or it's not an unprecedented time. This is he calls it the Corona crush, and the thing is, it's an opportunity to think about what we're doing, do a little bit better, be more specific, and then reach out to friends through the chamber and get some help if we need it, or to help others. So again, thank you for everything you're doing out there, and we're glad to be the sponsor of this event. Thanks.
Awesome. Thanks, Trent. And sorry about the different screen. We'll get that worked out and figure out what's going on with that. So thank you. And with that, I would like to introduce our speaker for today. So our speaker is Stacey Captain with Edward Jones Financial. She'll be discussing the economic and market outlook and answer any key questions facing investors. Stacey will also review how to navigate today's markets, avoid common mistakes, and leverage unique opportunities. So welcome, Stacey, and thank you for taking time out of your busy schedule to help us with the webinar.
Well, it's my pleasure. Thank you, Jess. And good morning, everyone. It is so good to be together with you here in Zoom land. I feel like we get to have a little party when we get to connect like this. So I would say that we should all lift our coffee cups and make a little toast to all things that are good in our world today. So, and I want to give another shout out to Trent and Renee Murphy and CJM Financial for sponsoring this. I just have to compliment that. You guys are always sharing your knowledge and your resources to make those of us around you better and more successful, and it doesn't go unnoticed. It's definitely a boost in certain times like this. And so I know I speak for a lot of people when I say just thank you for the kind of pay it forward attitude and behaviors that you bring to our community. We very much appreciate it. So, and Jess and the Chamber, thanks to you for continuing to bring your talents and your creativity and technology to give us all ways to continue to connect and learn from one another. Jess and I were talking yesterday, and not all chambers in the nation get to remain open during this difficult time, and we are fortunate to have such an active and vibrant and financially healthy chamber here supporting members through the trying times. So again, thanks for all that you do at the chamber. And to everyone listening, I hope your families are healthy and safe and continue to be that way. That's the most important thing in everything that we're talking about. So I'm just kind of wondering if we can even imagine what this pandemic would have been like 20 years ago if we didn't have the technology that we have today. And I bring that up a little bit just to make us think about the role of innovation in our country and in our economy. The way we got into this recessionary period is certainly unique, but the way that we will get out of it is not unique. It's the same way we've gotten out of all prior recessions, right? 2000 with the technology bubble, 2001 with the 9/11 attacks, 2008 with the subprime mortgage crisis. We got out of those because in part we are the USA and we are global players, but we, you know, our government, our businesses, our individual citizens, we rally together and we get through this, and we will do the same thing here. We are already doing it. So we will get to the other side. It's just going to take some time. My name's Stacey Captain. I'm with Edward Jones, financial advisor, and I've been with the firm for 7 years. And Edward Jones is actually almost 100 years old, and we're a full service investment firm. So of course we offer quality investment products, including stocks, bonds, annuities, life insurance, disability insurance. But what we really do is we work with our clients to help understand what's most important to them, and then work through our proven processes to come up with personalized financial strategies and help people achieve their long-term financial goals. And so good financial advisor, right, is going to help you organize your finances, put together a plan, and then partner with you over your life to make sure that you stay on track towards your goals. So personally, I've been around the industry for many, many years, but I've been more on the operations and marketing side of the business. I just always wanted to work one-on-one with people and families, and that's what I get to do now, and I love every day of it. And maybe I'm a little biased, but I don't know that I would do it with any other firm than Edward Jones. So if you want to learn more about who I am, why I do what I do, you can go to my Edward Jones website, or you're free to call our office and set up a time when I can talk with you individually about your personal financial situation and questions that you might have. So we're going to talk about 3 things today. We're going to talk some about the economy and market expectations, also about 4 pillars that we think the stock market needs in order to really establish its base and continue to grow, and then some ideas on opportunities that exist for investors given current market conditions. So as we talk about investing, I do think it's important that we visit what I call normal volatility within the market. So we know on average that 3 times a year, we see a 5% pullback in the market. And once a year, on average, every year, we see a 10% pullback. Every 4 to 5 years, on average, we see a 20% pullback. But we are not used to that because since 2008, in the last 12 years of the bull market or the growth in the market, we've not seen average volatility. So here we are in 2020, and all of a sudden we are just kind of whacked with what's been a 34% drop off of February highs. And we are just not used to the volatility, but these things happen. We will get through them. And, there's no reason not to stay invested in the market and in line with your long-term plan. So as we're talking about investing today, for the most part, we're talking about investing in large companies, right? Large established companies with strong balance sheets, most likely that are on the S&P 500. But I'm confident that a number of people listening today are probably owners of or associated with small businesses. And so it may be that given these difficult times, the last thing on your mind is investing in the stock market. But maybe you're already invested. Maybe your business has a retirement plan that you've been investing into. And if you're fortunate and can continue those contributions during this times, you're fortunate because you are buying low, right? You're buying when the market is on sale. Or maybe as a small business owner, you are thinking about future and eventually putting in a small business retirement plan for your employees. So even if investing in the stock market isn't top of mind for you today, hopefully there will be some things that we talk about that you can take away and apply to your personal situation. So we talked about some volatility here in the early part of the year. If we look back at the start of 2020, it was just really a continuation of 2019, which was one of the best years in the market since 2013. All things were bull market forge ahead, right, with minimal volatility. And then after February, we saw this 34% pullback that happened very quickly, historically quickly, between the end of February and March 23rd. Since that time, in April, the market was actually up 13%. Again, a historically good month in the stock market. And we are up about 26% from the lows of March. So that is good news from April. And I think a little bit of context for our conversation today is to think about the saying that we've all heard, which is, do April showers bring May flowers? And yes, we believe they do, right? We don't anticipate seeing full blooming gardens in the stock market for a number of months, but there are some positive signs. And so I want to talk with you about those a little bit today. May, what are we going to see in May? Well, we're going to see kind of an unprecedented reopening of the economy. And that's a positive thing, right? It's not being done without continued consideration for the virus and the impact that it may have. But there is a little bit of positive news there as well. We are seeing globally number of cases of the virus decline, and we are not seeing a resurgence of the virus as other countries reopen. So a little bit of positive news in there amongst the uncertainty. So we at Edward Jones say there are 4 pillars that we need for the market to really kind of reroute itself and to grow. And 2 of those are already in place, and we're going to talk about why they're important. And then 2 of them are where the uncertainty remains. But the first 2 are government stimulus, which we have seen, and the Federal Reserve. So government stimulus is important. It's been, it's being delivered, and the Federal Reserve is also being very accommodative. They've lowered interest rates to practically 0. So those things are very important because we can think about the Federal Reserve as, if we go back to the garden analogy, think of the Federal Reserve as the tiller of the soil, right? Their job is to make sure that our markets remain liquid and to stimulate the economy when we need it. And so their aggressive efforts to buy unlimited amounts of government bonds and even corporate bonds is important because it puts money into the economy, or really it stabilizes bond markets. And bond markets are where companies and governments go to get money to grow their business or operate their business when they need that cash. So, and also, the government stimulus, that's very important because that's being completed through attempts to loan money to businesses and consumers and allow them to pay it back at very low interest rates. and getting that money into the economy so that we can be spending it is important for economic support as well. So those 2 of 4 things that we need for the market to recover are in place. The other 2 things are, number 1, we need to be able to see into what second quarter corporate earnings are going to be. And we are starting, companies are starting to report what their first quarter earnings are and giving insight to how they feel they need to be adjusting what they had forecasted for second quarter earnings. The bottom line on that is we know it's going to be bad, right? Second quarter earnings for companies are going to be bad. The thing about the stock market that I think is important to keep in mind is that the stock market is forward-looking. The economy is not, right? Economic data that we get is actually historical, but the stock market is forward-looking, and it has taken into account very negative corporate earnings for second quarter. And we know that to be true in part because the way we're seeing the stock market react to some of the bad economic news that we get. For example, over the last number of weeks, we've seen horrible unemployment numbers that are very concerning, but we don't even see the stock market reacting to that. And that just tells it that, you know, that the stock market has built that in, and that's why it's not reacting. It's not shocked. So stock market does not like uncertainty. And so the fourth pillar that we need for the stock market would be just further information about how far the virus is going to spread and what the impact is going to be. And that is certainly an uncertainty that is going to continue to provide volatility in the market. History does show that pandemics usually have a temporary effect on economic growth until the disease is contained. As I mentioned, you know, we're seeing lower global cases of the virus and not seeing renewed outbreaks as the country opens. So the market does like that. But again, we're going to continue to see volatility. So one other thing on the economy before we get into ideas for you in this market, you know, the economy is really made up of four different things, and 2/3 of the economy is consumer spending. So think back to the end of 2019 and the start of 2020, the majority of the economy of consumers were in a great place. And so that really serves as, we'll call it solid soil in the garden, right? That is going to help us recover from the current situation. We've moved into, moving into this health crisis, which it's not a financial crisis like in 2008, moving into this health crisis with healthy consumers like we had and a healthy economy like we had is definitely going to help us recover a little bit more quickly. So what does it really mean to you as an investor? So I have some ideas for you. First of all, and I already mentioned it, is stay invested, right? Be patient. Just from the quick downturn and the quick recovery, it shows us this is not an easy market to be a trader in. And it's a great market to be an investor in. Just stay patient, stay invested, and let your money let your portfolio do its work for you. A unique way that we got into this recession, but we'll get out of it the same way that we always have. And innovation will be a big driver of that. I encourage you to work with your financial advisor, reevaluate your portfolios. So we talk a lot about the stock market, but a good balanced portfolio also has a certain percentage of bonds in it, depending on what your objective is and what you need your money to do for you. So revisit with your financial advisor, because let's think about the math here. If the value of stocks go down, then the percent of stocks in your portfolio is down, which means the percent of fixed income is up. And there may very well be opportunity for you to rebalance by taking money off of the fixed income and moving it over into stocks, which are on sale, right? So it's your opportunity to buy low and kind of reposition your portfolio. So we talk about positioning portfolios for these downtimes, but once we get into these downtimes, then we need to reposition our portfolios for getting out, for the recovery. And so that is one way to do that. Also, talk with your financial advisor about where the investment opportunities are, right? Not every sector in the economy and not every company is going to recover the same way. In fact, this may be an opportunity for you to divest a little bit from your very diversified mutual funds into a few stocks that have really been beaten up in certain sectors that are going to recover more quickly and to a greater degree than a broad-based mutual fund would. And just one example of, I guess, where different sectors are impacted and different companies are impacted differently. It's important if you're moving into individual stocks, you want to think about those companies that are going to continue to have demand as we move through this virus and as we recover. So for example, if we think about airline industries compared to cruise lines, right? People ask, gosh, maybe it's a great time to invest in cruise lines. Well, maybe, but it's probably riskier than investing in an airline because airlines are essential to business and to our economy. And if you think back to 2001, after the attacks of 9/11, we all looked at each other and thought, my gosh, I don't think we'll ever fly again. People won't ever fly again. Well, 2019, there's more airline traffic than ever, right? We recovered from that and we do travel and we will again. But that's more of an essential business. So as you think about investing, an airline would be more essential than a cruise line would be. And so the greater opportunity for recovery in that sector compared to the other. So yeah, a few ideas there. And then I guess the last one would be, it's a little more complex strategy, but think about Roth IRA conversions. And at a very high level, what that means is taking money out of a traditional IRA, which is deferred taxable income. Take money out of that, pay the taxes on it today, move it over into a Roth IRA, where moving forward, all of that money is going to grow tax-free. So you're moving money that is down in value in a tax-deferred account over into an account where it's going to both recover and grow in the future tax-free. So it's a conversation you need to have with a financial advisor and probably include your CPA as well. But it is a strategy that a number of folks are taking an advantage of during this time. So hopefully those are some highlights and a few ideas that give you a little more comfort in your investment approach or ideas to use to change if you're not comfortable with your current approach. But investing is a long-term strategy, and there's no reason that we should not be staying invested and looking for opportunities to even better position our portfolios as we move towards stages of recovery. So, gosh, I appreciate the time with you today, and if I can answer any questions, I'd be glad to do that.
Thanks so much, Stacey, for all that information and some tips and some things to look at. So we'll go ahead and open it up for any questions. We'll give everybody a couple minutes to submit those. You can submit them via the chat or the Q&A. Either one is fine. So Heather just did a shout out for you, Stacey, just thanking you.
You are very welcome anytime.
All right, well, okay, so we did have a question submitted. Janet is asking, do you recommend moving some HSA funds to mutual funds?
Well, your HSA funds, I'd have to look at your individual situation, really. The HSA funds HSA is a pretty valuable tool because that's money that it's kind of like a Roth IRA in the sense that it's tax-free and growing tax-free, and it's money that you get to use on a tax-free basis to pay for healthcare. So you would have to look specifically at your individual situation, but I would keep that in mind as you make decisions about that.
All right. Thank you, Janet, for some question, and Stacey for giving an answer. Anybody else have any questions today? Zena just submitted one. Is this the type of market for a new investor to get started with?
Great question. This is a perfect market for a new investor to get started in, because I think if you do it right with the advice of a good financial advisor, you're going to, in a couple of years, be really glad that you started. And because things are, I call it on sale right now in the market, there's good opportunity for some, I think, I'm not going to say immediate returns, but returns that you will see in the next few years, which is a very encouraging way to get started with investing. So great question. And yeah, I would encourage you as a new investor to consider it.
Fantastic. All right. Well, I'm going to go ahead and share my screen, maybe not. So I just want to say thank you to CJM Financial. Oh, it looks like we had another question submitted. Oh, it was just a comment. So Trent had just said it was great information. Never thought about making the conversion diversity to a Roth IRA for part of my retirement portfolio. So some comments there. All right, so let me share my screen real quick. So thanks again to CJM Financial for being our presenting sponsor today and being our presenting sponsor for our Business Illumination series. So thank you to Trent. I'll give you a chance to kind of wrap things up here in just a second. And then we do have several events coming up here soon. So we took last week off to try to just sit down and kind of reconvene and figure out some great topics for everybody over the next month. And so we will continue to have our Chamber Coffee on the Couch every Wednesday, with the exception of next week, which will be on Thursday, May 14th at 10 a.m. It's just a great way to network. We usually have between 20 and 30 people on there. And we've got some room hosts who help kind of guide that conversation. So it's a really good time. A lot of people have been connecting afterwards. So if you can join us, please do so. It's free to participate. And then we are going to have one more webinar as part of the Business Illumination series this month, and that'll happen on May 21st, and that'll be reducing your risk of a cyber attack. So Team Logic is going to be joining us for that. And then next week, we've got our BizLab workshop, which is going to be on the 13th. And so Jeff Reed with the Elevate Co. and Carlos with Bluebane will be helping us present that virtually. And that's going to be amplifying your value, moving from good to great. So we've got quite a few people signing up for that. The space is limited since it's more of a workshop style. So if you would like to participate, please get in and get signed up sooner rather than later, because I think we've got a limited number of seats left for that. Also, it is free for our members to participate in that. So that's another great free opportunity for education. And then we're excited to do a Back to Business mini series. And so this is kind of a spinoff from our Business Illumination series, really just kind of focusing on how to get your business back to business after COVID. So, and in preparation to getting back after COVID. So we've got 3 series or sessions lined up. So the first one's going to be next week, and that's going to be on workplace safety measures. So we're really going to kind of go through that cleaning checklist, CDC guidelines, and things like that with Chad with Janny King. So he's going to be joining us for that. And then on May 20th, we'll be doing doing one on integrating your team back into the workplace. So we've all been working from home. So trying to, make that transition back into the workplace a little bit more easy on everybody. So, and Stephanie with Craig Tool is going to be leading that one for us. And then we'll have one final one, which is going to be your legal responsibility as a business when you get back to business. We don't have a firm date on that yet. We're working with our calendar with our speaker. And so we'll have more information on the date on that, but it will be the week of the 26th. So hopefully we'll be able to provide some great content for everybody, and hopefully everybody will be able to join us. So thank you, Stacey, for kicking off our month of May for some education.
You're welcome.
And with that, I will turn it over to Trent to wrap us up today. So Trent, you are unmuted now.
Hi, thank you again, Stacey. That's some good stuff. I never really thought about moving and diversifying to Roth IRA with some of my investments. That's a very good idea. If you have a business and you have business debt and somebody owes you money for services that you've already rendered or product you've already delivered, that's what CJM does. So give us a call if at any time you need that assistance, whether it's credit collections and cash flow. Again, thank you to the Chamber, and thank you to Stacey for all this great information.
Thanks, Trent, and thanks, Stacey, and thank you everybody who joined us today on the webinar and on live. Hopefully we'll see everybody soon. Thanks. Have a great day.
Thank you. Bye-bye.